Welcome back, everybody. Gabe Velazquez here with you, transparenttrading-solutions.com. Hopefully everybody is doing well. Let's get right into it. As we have, I was with you guys. Let me see, make sure everybody, go ahead and type in the chat. I got a 30-second delay here. So if you guys type in the chat, make sure everybody can hear me and see me okay. We'll get started. We were together on Friday and mentioned a few things. So let's recap. How you doing, Dennis? Welcome, everybody. Okay. All right. So we have been talking about, the S&P. Let's start with there. S&P sitting at a key level, 4,100, 4,200. And it's been basically just basing there for the last 2 days since Friday. Really, we came up there. In fact, if you look at your charts, everybody pull up your charts as we should actually start with that. So go ahead and pull up your charts and we can kind of look at these together. As we come in this afternoon, we basically have a very kind of defined range. It's actually pretty symmetrical. We keep pushing up against that 4140 high from just a couple days, and right back down to 40. What is it, like 4090? Actually, 4150 is actually 4085, somewhere around there. So all in all, kind of just range trading. Again, you can make the case that it is still consolidation. We have AMD earnings. We have the jobs number on Friday, which obviously going to be very impactful. So I still think that we have maybe a little bit more upside here up to the 4,200 level. Again, if you draw that weekly distribution, again, it's not a mystery, but coming in again, just to reiterate what I talked about on Friday, we've got, the VIX approaching 20. We've got some seasonal weakness coming in later in the towards the end of August, early September, all through September. So that could be a factor. Again, I would still, I still want to give the market the benefit of the doubt in terms of going higher. But as we move gradually higher, I would, in fact, we're starting to look at, again, some shorting opportunities and so forth, especially, AMD is going to be interesting tonight. Advanced Micro. I think I talked about this, about a week ago, or I actually wrote about this about a month ago. We right up at against that 100 mark on AMD coming into the earnings print this afternoon. So I am going to set up some trade. If we have a nice pop in that thing up to about 105, 106 area, if you take a look at that chart in AMD, okay, obviously it's going to have a big impact on the Nasdaq as well. It's one of the biggest semiconductor stocks. So watch out for that later. And we do have, we're sitting right at 100, but look at around 107-ish on that stock. If we can get up there, just like I was talking about Apple at 165. And by the way, notice Apple still lagging, still kind of languishing, can't even get up above 165. So all these kind of under the surface, under the hood kind of situation. So I think AMD is setting up for a nice short if we get a pop again up to around that 108 to 107 to 108 level. So we'll be looking at that. Okay. On the Nasdaq, similarly, the Nasdaq, 12,800, 13,100. Again, kind of consolidating. There is a higher level. I think I mentioned this on Friday. If we can get the Nasdaq rolling here, which we could, looking at that 12,327 area in the Nasdaq futures. Also, as I mentioned, TQQQ, QLD. Those are the things I would also start looking at. And by the way, I will be looking at some puts, possibly on QLD. If you look at QL, I don't know if you guys are familiar with QLD. QLD is actually the double long ETF that tracks the Nasdaq 100. And why I use that is because that gives us, it's almost like leverage on leverage. So when you buy puts or calls on that, you can use TQQQ, but that's only like a $28 number. QLD is a $51 number with a 3.5 ATR. Looking at that, it's sitting at 51. At around 58, 59 would be a really good area to start maybe looking at some puts on QLD. Okay, so we'll check that out, and that would correspond coincidentally to that 12,325-ish area in the Nasdaq futures. Okay, so I think that pretty much sums that up on the averages. Still, again, kind of maybe some are doldrums, whatever. But again, the big number is going to be coming in on Friday, as you know, the non-farm payrolls. Something interesting going on today with the bonds. Let's move into the bond market. Bonds got really hit. Now, I mentioned last Friday the 140, the 121, 122 area in the 10-year. That was a distribution that hit earlier today, and they really took the bonds down hard off that level. And part of what is, it's very interesting, how volatile the bond market got today. And a lot of it is attributed to possibly a situation coming up in Taiwan. I don't know if you guys have been watching that. I don't know how that relates to anything, but, again, people have to always kind of ascribe, why things happen. But I think what's going on is, the bonds had a really nice rally on the premise that the economy was slowing down. In fact, we had some job. What is it? The job. Can't remember exactly what it is. Job openings or whatever are starting to come off a little bit. So it is a little intriguing. I have to tell you, it is a little intriguing what the bond market did today. All in all, though, if you think about the pullback today and you look at your charts, especially on the TLT, 118 is the TLT is a kind of a pullback area on an ongoing move up in the TLT. So if we can hold on to this 118 level and then resume the rally, I think we still got about to 125 on TLT. That also comes in on the 10-year, looking at potential this 120 that was old kind of support is now becoming new. I'm sorry, old resistance is not becoming new support. Let's see, Dennis, would be a big deal if China makes good on their threat of shooting. Yeah, of course. Well, that would not be good, right? In fact, that would actually, so the thing is, that would actually probably rally bonds, right? That would be a kind of flight to safety. And by the way, also the dollar had a nice move on the same kind of premise, right? So the dollar did come down, very obvious level, accumulation, 105.15, 104. I think I did mention that on Friday. We are getting a nice bounce. And that in turn is causing the metals to fall back off. And remember, I talked about the yen on Friday. So the yen indeed came up to, I actually have both sheets. I always want to backtrack what I talked about because again, I want you guys to really start tracking what we're saying here. Um, I believe I mentioned the 777 level on the yen, right? Uh, and if you check it out on your charts, guess what happened when we hit 77 on the yen? We had a pretty sharp sell off on the yen. And that, by the way, coincides with the dollar hitting the accumulation. So you got to understand the corollaries there, right? Um, so now where do we go? The yen, I still believe, is in the process of possibly putting in a bottom. We do have a pullback area I'm looking at the yen, much lower. Also, kind of related to that, gold and silver. And in particular, again, I gave you guys, I talked about the 1800 level in gold on Friday. We hit a high of 1805 today, and gold is also backing down a little bit. It is coming off a little bit. So the again, that partly is to do with the dollar rally. Again, those corollaries are still pretty strong right now. Yeah, Dennis. Well, here's the thing, though. If you think about it, why it is until it isn't. So as the market has been selling off in the last, 6 months, what has the yen done? Right. So these corollaries come and go. Yep. And part of why the yen has been just been so weak is because of their monetary policy. They've continued to ease. They continue to keep rates down, and that's why. But there will come a point where uh, you know some money will be attracted to that currency, and especially if they start talking about maybe stimulating the economy or less. Being less stimulative to their economy and so forth. So it's an interesting dynamic, and it just may be that it's just oversold at this point. And now that things are starting to shape up, yep. So we'll see. It's interesting. In that regard, the euro hasn't done anything really. Just kind of mired in a range and at 20 plus year lows. Still, I think that par level is going to be a very key area for the euro against the dollar. But all in all, not a lot of going on there in that regard. Also, want to touch on in regards to the currencies, since we're on the currencies, we have Bank of England early morning Thursday, which again could create some volatility in the British pound, British, especially, and by the way, everybody, I know I get a bunch of people after here, getting close to 150, 200 views on this thing afterwards. By the way, do me a favor, subscribe to the channel, put in some comments, help support the channel so I can keep doing this. And also, if you guys want to check out the website, I am going to do a free beginner options presentation on Thursday. If you are interested in learning more about options, which I encourage everybody to do, by the way, you got to have options as part of your repertoire in your trading and investing, aside from the futures, because futures, as we know, can be sometimes very, very challenging, especially with the leverage, and especially like for now, if you guys have been trying to trade futures, it's been with the equities being, especially in the last couple of days, being very choppy. So I utilize, with our members, we utilize options for our longer term plays. For instance, we've been in TLT for, gosh, almost a couple of months. Some of these stock plays, GLD, we're looking to get long GLD. AMD, some of these stock plays. If you haven't done options, this is the way to do it with options and or stocks as well. So I do encourage everybody to at least understand how that works. They're so versatile. One of the things, again, and I don't want to get into a promo here, but one of the things that about options is everybody makes them overcomplicated. And if you guys have ever taken a class with me, and I encourage you to maybe join me on Thursday, I keep it very, very simple. I like to keep things very, very simple. And in regards to option, that's also the case. I don't think you need to learn all the Greeks and all that. So in any event, all right. So if you know anybody that wants to learn options, there's a link below, or all right, touch base with us at support at Transparent Trading Solutions, and we'll get them hooked up with the class. Okay. All right. So let's see, where were we? So let's see. So we talked about the dollar, the yen, gold. What else? By the way, do you guys have any questions? I got about 13 minutes here. Anything you want me to cover? Lastly, I want to talk about crude. Actually, that was next on my list. So crude, they're basically, in a nutshell, crude is trading between 90 and 102. We have an OPEC meeting coming up tomorrow. And if you've been, by the way, have you been actively trying to trade crude oil? Is it Nasdaq? Have you been? It's been a challenge, right? It's been all over the place. Yep. So what I advise people to do, and we at TTS have not been actively trading crude oil. The reason is because, again, if you look at the chart patterns, if you look at the price action, even today, it looked like it was going to rally, and then it, fell right off. And, again, all you got to do is look at the price action, and you can see it is very, very challenging. So I would suggest to you, look at, again, in the low 90s. In fact, the next level is way below that. If we break 90 on crude oil, the next level is in the mid 80s. And if you noticed last week, it looked again like we were trying to attempt a rally and failed miserably at 102. And so, it's been a little tough. And then with the OPEC coming in tomorrow, I would probably wait for price extension on that. In other words, there's once we break above 102, there's some some better levels above that. That's where I would probably trade that. And if we break 90, doesn't mean you can't trade inside the range, but understand that it's going to be a lot more challenging. Does that make sense, Masnak? Okay. And I don't think we're actually going to get out of this range for a little bit until something, either the war resolves out, the war in Ukraine, whatever, Russia, until that gets resolved, or until we actually get, the supply is still going to be tight. So there is a bullish, still, you can make a bullish case for the long term in crude oil. However, the reason it's been selling off is because of the, recessionary fears and so forth. Well, that's the thing. When you get them right, you're basically have to try to trade momentum, which is on a probability scale. I like to tell people momentum on a probability scale is a lot, is not a high probability situation. So it's kind of hit and miss. Overall, if you try that kind of trading over a large sample size of trades, you know what I'm talking about. The statistics are not great. So, anyways, okay. Nat gas pulling back. I talked to you guys about cold, KOLD, boil. We had a nice gap over the weekend that filled, and nat gas pulling back. We are coming into some some pretty nice little accumulation areas. Exactly, Dennis. Yep, yep. Yeah, that's. But as human nature has it, as you know, uh, you gotta get beat up a little bit until you figure it out, right? Nobody telling you is going to make you change what you're doing, unless you're, until your account dwindles slowly. Unfortunately, right? Right, Dennis? Yep, that's typically what everybody has to have happen to them before they decide, oh, well, I better try something different. Yeah. Okay. All right. So on the nat gas, we looking at some levels below. In fact, those could in fact come in maybe later tonight. If you look at your chart of nat gas, we had that blow off, which I talked about here, and we've come off pretty nicely. What we came like took that high out, 9.5, went higher than that, which is again a typical blow off. Exactly, Dennis. Yep. And now we're coming into some really key areas in nat gas, which again here at TTS we're going to be looking at some levels in there in the next few days. We've got inventories on Thursday. Inventory numbers have been creating some volatility there, so we'll have to see. And there's various ways we can play that. I think I mentioned cold and UNG and Boil, BOIL, on the ETF side, but obviously, and then there's the quarter size futures contract if you are not not comfortable with the full size, the 10,000 millionth BTU contract as well. Okay. All right, let's finish up with another one of my favorite markets, which are the grain markets, which have been, by the way, if you don't trade grains, you're missing out, because those are, in fact, the ones that are actually having the best movement in recent weeks, correct? I mean, right? If you look at the soybean market, if you look at corn, wheat, again, not for everybody, but one of the nice things about particularly corn and soybeans, and there's also the derivatives, which we look at here at TTS, which are soybean meal and soybean oil. But if you look at the soybeans, they've had a pretty nice correction, and they've kind of been chopping around. Looking at, look at your chart on the soybeans around the 1350 area. Look at corn around the 585, and wheat has been a range trading between 838 and 765. That's a nice little range area on the wheat. And again, wheat has been extremely volatile, swinging 30, 40, 50 points a day. And again, at $5, a point, I'm sorry, at $50 a point, it's been pretty volatile. So, make sure you understand the volatility. And wheat is one of the less liquid, let's call it, right? So you might get some slippage in that and the mini contract's not really that liquid on that. So take a look at the grains. Clearly, with what is happening in Ukraine, with food inflation and all that, that has been an extremely volatile market. Which, again, if you understand how the markets work and can pick turning points, those have been really, really productive. But again, chasing is not something you want to do with any of these markets, really. Buying high and selling low is something that I do, that we do, not buying high and selling higher. It may work, and it does work sometimes if you have if you pick your spots right. But we know that, again, over the long haul, that is not the most productive way to trade. Okay. So let's see, oil. And okay, I have about 5 minutes left. Is there any other markets or any specifics that you want me to touch on before I get out of here? I know I got a 30-second delay, so I'll see if anybody's typing in here. Yeah, so all told, we're kind of getting into, kind of a little bit of a summer doldrum thing. And we probably chop around until Friday. That again, that non-farm payroll number with everything going on is looming very, very large, just like everything else, right? So the rally, a lot of people were talking about the Fed pivoting and all that, but it's still, I think it's way too early to make that assessment, to make that conclude that the Fed is basically done tightening and all that. So, but, again, remember, markets short-term trade on perception, but in the long haul, fundamentals do matter, right? So in other words, if indeed we are going to slow down to the point where profits are going to be affected, and to the point where yields keep going up higher and higher, affecting housing and so on and so forth, that will be eventually reflected. Remember that the tightening just started in June, and so that the whole effect of tightening and tighter monetary policy, higher interest rates, have to filter through the economy, right? And so, again, Dennis, who knows, right? Who knows? And the last thing, again, is I wrote about it this weekend. If I told you we had a weak GDP number, i.e., recession, if we have 5 of the biggest companies in the world missing their earnings and a Fed tightening, and I asked you which direction you thought the market was going to go, what would your guess be? Right? It would be probably lower. But why did the market rally? So you have to understand that the whole sell-off, exactly, but why did, and again, it's kind of head scratching. Why did it go up instead of going down? Well, think about it. Again, forward-looking markets, in fact, bad news for the economy is actually good news for stocks right now, in the sense that if we continue to have lower if employment really starts picking, the unemployment rate starts picking up, and the inflation numbers start coming down, that would actually take the Fed, obviate the Fed of continuing to raise rates, and that's what the market is really keying in on right now. It's all about the Fed, everybody. Don't fight the Fed. We used to have that saying, right? You guys, if you don't know what "don't fight the Fed" means, the reason we had these massive rallies in the past, especially after COVID, is because of liquidity. So that applies there too. Don't fight the Fed means you don't want to short the market. You had this massive rally because of all that liquidity flow, being put into the system. Everybody getting stimulus checks, the Fed pumping money into the economy. Well, the opposite is happening now. So when we talk about "don't fight the Fed," that's the same thing, and that's so it wouldn't shock me, again, coming into September, whatever, if we get a lot choppier and perhaps even fall and test the lows again at some point, right? So, okay, everybody, thank you for joining us again. Subscribe to the channel, give me some thumbs up, and again, I'll be with you guys on Friday. All in all, I would say, just be very, limit your expectations about what the market's going to do at the moment, and I think Friday is going to be the big one. After the non-farm payrolls, we'll get another sense as to the next breakout move in stocks. Okay. All right, everybody. Have a great rest of your week, and I'll talk to you guys Friday on the close, and we'll see what goes. Okay. All right. Take care, everybody. Have a great rest of your week.